Hi everyone, today I'm talking about the brand new stock that I've just bought, which is Constellation Brands. I've been looking at a few stocks recently and getting into them. I have tried as much as I can this year, quite early in the month. I'm putting a bit of money aside, buying into a new stock or adding to a position that I have. And this month I've been trying to add into my position of Microsoft, which I've not been able to do yet because the price has gone up quite a bit. And I was looking for a new stock to enter as well, and the new stock I've chosen to enter is Constellation Brands, and I'll go through a few reasons why I enter them and kind of what I'm planning to do with that position and where I'd sell out at this position overall. But overall, the market itself has gone up quite a bit since the lows back in December, about Christmas Eve time, and the market's recovered really quick, so a lot of the discounts that were there have already gone, which is a little bit unfortunate. I was hoping the recovery to be a little bit slower than that. So we'll see what happens going forward, but I think a lot of the stocks went from being undervalued to a pretty much fair value right now. So hopefully there's a little bit of a pullback soon and there'll be more chances to buy. But one stock that I saw hasn't pulled back as much as the others was Constellation Brands, and I believe that that stock's been on a little bit of a discount for a while. So I'm going to take you through the view that I had of Constellation Brands, and then a couple of things towards the end about Constellation Brands overall. So the first thing that I thought when I'm looking for a stock is I always look for a good valuation that's on a discount. So the first thing I do is I'll look through a stock and see which ones are trading quite a bit below the 52-week low. Constellation Brands was actually quite far below its 52-week low. It's come off its 52-week low just slightly a little bit now, but not by much. It's about probably a quarter off its 52-week low overall. So I thought, right, let's dig in, see why it's on a 52-week low and everything else is pretty much recovered overall. Now the main thing that Constellation Brands had, why it's down towards a 52-week low, is that it ended up raising its guidance about a quarter ago, and then it actually turned around and then it actually cut its guidance back to where it was. So that was one reason what sent the stock down, and its earnings report overall was actually quite solid and it beat it. Constellation Brands actually has a really good history of beating its earnings. I think over the last 9 earnings it's only missed 2, which is pretty good. So yeah, that took the stock down a little bit because you raised it and then you cut it. It was a bit like a bit pointless really overall, a bit of a fail. And the reason why is because of canopy growth. A few people were kind of like a bit nervy when when Constellation Brands tried to get into canopy growth, and they actually took on a little bit of debt to go buy a bit of canopy growth, and they have an option to buy canopy growth over together. We'll get on to canopy growth in the company a little bit further down the line, but canopy growth pretty much is a stock that's a weed stock, and they're kind of getting ready for the legalisation of marijuana in Canada and potentially in the long term for medical use, and also if it gets legalised in the US, it's kind to get, if that happens, a brand new market which is now open for a lot of companies to get into, and Constellation Brands took on that company to try and prepare in case they were going to get into that market, in case it kind of goes off like crazy. So I thought 52-week low, there we are, there's the news why it's down so much. Let's see if it's really worth getting into overall. So I looked at Constellation Brands, I had a quick scan overall. By the way, I got in at 173.32. That's where I bought in my position. So I looked at the PE. PE is 12. Now I know from watching this stock quite a bit, the PE on this stock was about 20 for the most of last year, and I think like 20 for like 2017 as well. So I thought, over the last kind of like 2 years, that's quite a low PE for these guys. The dividend has gone up again in 2018. It was up to 0.74 a quarter. So I knew that they're raising the dividends from 0.50 cents last 2017 to 0.74 now. Hopefully in 2019 they're going to raise that a little bit. Hopefully we're pushing towards like the $90 cents per range per quarter, which would be pretty good. So good dividend play overall. EPS, the EPS is still growing at 8.54%. That would be slightly better if they didn't invest into canopy growth, but it's okay. They're trying to prepare for the future with that investment. The revenue is growing at 7.4%, which is pretty good. Now for an alcoholic beverage firm to be still growing at these rates is really good. We look at some of the competitors as well, and a lot of the competitors are struggling for gross margins, and these guys are keep increasing their gross margins. I think right now it's at 41%. The revenue is way better than everyone else's. Everyone else is kind of struggling for growth right now, and these guys are growing absolutely massive. I think I'm right saying that these are the #1 growth alcoholic beverage in the US right now. So that's really good to be invested into right now. Even though it's not the biggest brand in there, it's the one that's growing the most. So I took that into consideration as well. But it's definitely one of the top 3 biggest in the US. So it was at a discount. I had a look at the fundamentals. I really liked it. So the big thing is to start looking at the inside of the company and go into a little bit more detail and look at how the company is actually performing overall. Now, when I look at the long term, it's actually investing in a lot of the beverages in its sector that it could invest in. So for the long term, if there's a lot of trends with alcohol, and sometimes it'll go to beer, and then it'll go to wine, and then it'll go to spirits. And when the trends switch around, we're on like craft beer right now. That's probably like the biggest trend, and that's up 5% I think last year. And we have Constellation brands that are a player in there big time. So because it's diversification on like alcohol beverages, whatever sector's in at the time is pretty well positioned for that. And if it rotates sector, it should be alright. Long term as well, we know that Constellation brands like to buy companies out and prepare for the long term. They've both bought canopy growth, and that could be like that's a game changer overall. If that gets legalized in the US, Constellation brands are going to be way ahead of the game because of the investment that they have. Their investment in canopy growth will give them a head start against a lot of the competitors out there overall. One of the best weed stocks that could be invested in. And that's like kind of like a big industry disruptor is the weed sector overall. So that's a really good play for them overall, even though you could argue that they have invested a lot into it. But Constellation's brands will carry on buying out companies, keep expanding the factories, so they're producing more beers overall. They're really good at that. They like investing quite heavily into the company, and that's how they manage to get so much good EPS and revenue growth overall. Diversification, like I say, they've got the craft beers, the wines, the spirits. They're also looking to get into the weed sector overall. So even though they're not in like spaces like the cloud sector or what have you, in its actual sector overall, it's probably one of the best diversified in that sector overall. So I was really happy when I looked into the company. I like the growth overall, and I thought it was on a discount at a low PE with great growth. So I thought this is a bargain, great dividend stock if it doesn't go up in the short term, in the long term overall. But I think it will do. Like I say, my point of view is that I'm looking at this from holding this stock now for a year, 2 year, and I'd like to sell this stock probably in the 200 range, low 200s, like 210ish. Is probably my target in Constellation brands. So it's not like Microsoft where I'm holding that absolutely ages. I'm just kind of playing that for a little bit of a gain overall. So yeah, probably 210 is where I'd sell out of Constellation brands if it got there. Microsoft wise, like I said, I didn't buy into Microsoft. I was waiting for it to hit that $99 per share range, and then it shot back up. So I'll wait on that one, but yeah, I were going to get into Microsoft as well this month, but it hasn't happened so far. So we'll see what happens. I'm kind of sitting on that money waiting for something to happen overall. But if I do buy a stock as well, another stock, I'll make sure I make a video about it, guys, and I'll tell you. But last video today, talking about Constellation brand stock and buying shares in at 173.32. I hope you enjoyed it. Thanks for all the support recently. 173 subscribers, absolutely amazing. So thank you for that. Give the video a like, comment, keep up the support. It's been absolutely amazing, and I'll see you on the next video.